Choong Ty'ng Ty'ng is the founder and managing director of Axcelearn Sdn Bhd. In today's webinar, Choong Ty'ng Ty'ng will be sharing on FM70, which had just relaunched on the 14th of December, and I will be sharing on what are the basics on the futures market with a few examples. Before we begin, I would like to do a sound check. If you can hear me loud and clear, just type yes into the question box. And also during the webinar, if you have any questions, do type them into the question box and I will address the questions during the Q&A session at the end of the webinar. Okay. So in today's webinar, this will be on today's webinar outline. Okay. Ending the futures market, and then we have introduction to the KLCI index futures and crude palm oil futures, factors that affect the futures market. What is new with the revamped mini FBM Mid 70 index futures? Discover why the latest contract specifications provide traders with the trading opportunities. How to calculate your profit and loss in trading the FM70, and how to protect and hedge your stock portfolio using the F70. Before we start, please allow me to introduce our company. As usual, I will need to emphasize on our disclaimer, where this presentation is provided to you solely for general information, and it does not constitute any recommendation. We are not liable for any losses arising based on this information. Investments are subject to investment rates. Therefore, you shall seek advice from quality advisor before making any investment decisions. Phillip Futures is a whole-owned October 1995. Our headquarters is in KL and branches are distributed across Malaysia, such as Kota Damansara, Melaka, Penang, Johor, Cebu, and Kuching. Other than that, Phillip Futures is a trading participant of Bursa Malaysia Derivatives Berhad, clearing participant of Bursa Malaysia Derivatives Clearing Berhad, and also holder of Capital Market Services License, which is also known as CMSL. In 2019, we have won the Bursa Excellence Awards. We have won the champion for the Best Institutional Derivative Trading Participant, the first runner-up Best Overall Derivative Trading Participants, and also the first Best Retail Derivative Trading Participant. Our network is distributed around the world. In an Asian country, we have Singapore, China, and Japan. European and American countries, we have US, UK, and France. Local is Bursa Malaysia. For today, we will be sharing about the products from Bursa. So what are the products available in Phillip Futures? So we have index, metal, agricultural, energy, and interest rate futures. So in the index futures, we have KLCI, Hang Seng, S&P, and Dow Jones, and etc. For the metal futures, we have gold, silver, platinum, and palladium. In the agricultural, we have crude palm oil, corn, wheat, and soybean. In the energy, we have crude oil, natural gas. And in the interest rate futures, we have 3 years Malaysian government securities. As we do offer the contracts for differences, we do offer Bursa Malaysia Top 100 Share CFD and then NYSE and Nasdaq Share CFD. Sorry. So why should you choose Phillip Futures? First, we also do provide wide array of products for futures that enables clients to trade both local and foreign products. Other than that, we send out latest market news and commentaries to clients every day through email for references. Our headquarters have 24 hours broking and execution support. This is important for clients who trade foreign futures, and we also have dealers who can assist you on your inquiries anytime. No matter you are our client or not, we do offer free one-to-one coaching session, free seminars and webinars, and free account opening. For free one-to-one coaching sessions, the key topics that we will be focusing on are the introduction to futures trading, product knowledge, platform coaching, and the charting system. We conduct free seminars and webinars regularly, but since we do not organize seminars at the moment, we focus to provide more live webinars with different topics for you to join. We have success. You can now open futures trading account online with no hassle. If you wish to open futures trading account online, feel free to visit our website, or you can scan the QR code and it will directly link you to the online account opening form. For free account opening, you will receive complimentary mobile and desktop platforms at no cost and access to a wide array of products, including global futures, commodities, interest rate, indexes, and metals. The platform for futures trading is Phillip Nova, which commonly used by our client to access global products. For the desktop version, it's web-based platform, but for the mobile version, you can trade using the Phillip Nova application, which allows you to trade anywhere and anytime. For the currently ongoing promotion, trade FM70 and win the prizes up to 30,000, open to all futures broker representatives. To find out more for the promotion, please refer to the TNC on our website. And next, we have our ongoing promotion. In order to reward our loyal existing clients who refer friends to Phillip Futures, we are having a friend referral program which open to all our existing futures trading and CFD trading clients. For the campaign period is from 1st of November to 31st of December. Connect with us now on Facebook, LinkedIn, or YouTube by searching Phillip Futures Sdn Bhd, and Telegram by searching Phillip Futures. Do like and subscribe our page if you haven't. We consistently will update our events, promotions, announcements, and market news. Our recorded video will be uploaded on our YouTube channel too. So if you have any queries, please do not hesitate to contact us even through calls, emails, website, live chat, or Facebook Messenger. Our representative will contact you as soon as possible. The first topic will be on understanding the futures market. Okay, so what is a futures market and what is futures contract? Futures contract is actually a legal agreement to buy or to sell a product at a predetermined price at a predetermined future date. You make a promise to deliver something at a price and on a date. So in the future market, no matter what happens, you will need to deliver it to the buyer or to the seller. Many people has misconceptualized that futures trading is to predict the price in the future. Actually, it's a misunderstanding. Okay, why trade in the futures market? First, we have low transaction costs. We have high liquidity, leverage, regulated by Securities Commission. So for the function of Securities Commission, it is to supervise and to monitor the activities of any exchange holding company. So why is futures market low transaction costs? As you can see from the table here, I'm comparing between the futures market and the stocks market. For the contract value in the futures market, for example, is 4,002, and in the stocks market, the contract value is 80,000. In the futures market, you only need to pay for the transaction cost is the brokerage fees, which is 15 ringgit. We don't charge the stamp duty and the clearing fees. And the total pay commission in the futures market is only 15 ringgit. But in the stocks market, the contract value is 80,000, but the transaction cost, which includes of brokerage fees, stamp duty, and the clearing fees. As you can see from here, the brokerage fees, which is around 400 ringgit, and the stamp duty also around 400 ringgit. The clearing fees is about 40 ringgit. So in the stocks market, the transaction cost will be about 825. Okay, from here you can conclude that in the futures market you will have lower total paid commission. Okay. For the high liquidity in the futures market, there are more. Why is it always traders will mention that futures market always has higher liquidity? Because there are more traders trading in the active month. Like when you want to buy a contract, there is always a seller, and you want to sell a contract, there is always a buyer. You can buy and sell easily. There will be no issue where you'll be unable to buy and sell. Due to high liquidity and low cost trading, a lot of traders are interested to trade in derivatives market, especially the futures crude palm oil. For futures crude palm oil, you can see from the two diagram here, because for crude palm oil, we have a few contract months, but how to determine which? You can see from the volume here for both Bursa Malaysia product, the crude palm oil and the FKLI. You can determine by the volume here, where these 2 months, the March 2021 for the crude palm oil and the KLCI December 2020 has the highest liquidity. Bidirectional trading. It is a very special about futures trading is that you are able to long and short in the futures market. You are able to trade long today and you're also able to short tomorrow. For example, if today you foresee that the market will go uptrend and you decide to long your position, and in another way around, you also foresee that the market might go downtrend, so you also can short your position. Okay. Leverage. Trading the futures market using the leverage. The stocks market, KLCI composite index, will be the current price is 1,600. So 1 point of the futures market, you only need an initial margin of 4,200 ringgit. And the leverage between the stock market and the futures market is 23 times. Means that in the futures market, you will only need a small capital, which is 4,200 to trade, and which is 23 times of the stocks market. Futures trading terminologies. Terminologies are the technical terms that we often use in the futures market. When you see like long and short, when you see long, it's when you expect the market price will go uptrend in value. And when you see short, and it means that you expect the market will decrease in value. Bid price are the buyer who are willing to pay for the contract. And then for the ask price are the seller who are willing to sell for the contract. Market price are the current or the spot price of the contract. And then settlement price, determining the profit or loss for the day. The settlement price of the contract is very crucial for investors because it indicates whether the loss or the money they have made on a given trading day. Initial margin are the amount of money required to initiate a buy or the sell position. In the futures market, to enter one contract, you will need initial margin to enter. For example, one contract of FCPO is 4,500 ringgit. And the value per tick is the minimum upward or downward movement of the price. For some contract, it moves by 0.1 or 0.5. For some contract, also move by 1 point. And the margin call will be when traders decided to hold overnight their position and the account balance falls below the initial margin, which is also the margin required amount. So for futures contract is when you buy, when you decided to which is called buy, and to short, which is also the sell, when you see the market will go downtrend or bearish. So what is margin call? Margin call happens when traders do not have enough account balance to hold position overnight. When your account balance is lower than the margin required. For the initial margin for FKLI is 4,200 ringgit. And the maintenance margin, which is also same, is the 100% of the initial margin is 4,200 ringgit. And your equity balance, which is the account balance, only left 4,000 ringgit. What is your margin call amount and how much you need to top up? Okay, this is an example of the margin call. Today, you decided to loan one contract of FKLI at the price of 1,005 and your cash balance, you have 5,000 ringgit. But the market dropped to 1,480, that is 20 points away. And you will have, because the market closed lower and your cash balance left about 4,000 ringgit, and you also decided to hold your position overnight. So the next day, you are still holding your one long contract of FKLI. You only have a cash balance of 4,000 ringgit. So you will have a margin call of 200 ringgit and more. Next will be on the introduction to KLCI index futures and the crude palm oil futures. What is FKLI contract specification? Contract specification is like the user manual. So what are the important things that you need to know about the product before you start trading? So for the FKLI contract specs, the initial margin will be 4,200 ringgit. And the contract size of FKLI is FBM KLCI times 50 ringgit. And the value per tick is 0.5 point for 25 ringgit. For KLCI, which means that it moves every. We have two sessions. The morning session will be 8:45 a.m. to 12:45 p.m. And then the afternoon session, 2:30 to 5:15 p.m. And the last business day of the contract month will be the final trading day. FBM KLCI represents the top 30 companies in a market cap of Bursa Malaysia. As you can see from here, the industry breakdown of FBM KLCI. The weightage, the highest weightage, which is the banks, it takes up to 30.62%. The banks inclusive of Hong Bank, Public Bank, and Maybank. And the healthcare sector, which is the second highest weightage, takes up to 15.14%. We have Top Glove, Harta Lega, and Supermax. These are the top 30 companies, which equals to one FBM KLCI. So trading in the futures market, you do not need to pick an individual stock. You are trading all the top 30 companies in one contract specifications. So for the initial margin of futures crude palm oil will be 4,005. And the value per tick is 1 tick equals to 25 ringgit, which means that crude palm oil moves 1 tick by 1 tick. And the contract specs and the contract size for futures crude palm oil will be CPO price times 25 metric tons. And the settlement is physical delivery. But in Phillip Futures, we do not cater physical delivery. And for the trading hours, we also have two sessions, 10:30 to 12:30, and then the afternoon session is 2:30 to 6 p.m. So for the final trading day of the crude palm oil will be, it expires at the noon on the 15th day of the delivery month, which is it expires on the 15th of every month. Okay, next will be on what are the factors that affect the futures market. We have interest rate, oil price, and the current most hot topic, which is the virus, COVID-19. There are more factors that might affect the FKLI market. So how do interest rate affect the FKLI market? During the pandemic, the central bank had announced to cut the overnight policy rate to ease the pressure of the downside risk to the economy due to the pandemic. And on February 12th, the banking stocks on Bursa Malaysia fell after the central bank said there is ample room for another round of OPR adjustment given the current economic challenges. And due to the higher interest rate, it also might tend to moderate the economic growth. Oil price. The global demand for oil has been increasing. So during the economic expansion, prices might rise as a result of increased consumption, but they might fall as a result of increase of production but lower demand. Malaysia is one of the oil producer. The oil sector is affected by put mobility to a halt. This is because there are fewer drivers on the roads, there are fewer public transport services were running in many countries, and the offices had shut down after the worldwide lockdown and stay-at-home orders, and the factories had ceased the production. This is when the demand for oil becomes lower, the supply exceeds demand, and the storage space has been running out. So COVID-19 pandemic is the major effect that had affected the FKLI market this year. So on 30th of March, 2 days after the Malaysian government had announced on the movement control order, the economic uncertainties and the virus's outbreak had pushed the FKBM KLCI below 1,003 points to a 10-year low. So next will be on what are the factors that affect the FCPO market: the weather season, the competition from producing country, and the competition from other edible oils. So the weather season like La Nina and El Nino are the major effect on the crude palm oil. Because the plantation of palm oil trees, they requires warm weather with humidity environment, which able them to grow up healthily, as too much rainfall could flood the plantation and it would also affect the plant's growth and lowering the production. Competition from producing country. The palm oil in Malaysia and Indonesia has taken up more than 90% of the supply to the world. Indonesia expects to double their production by the end of 2030, while Indonesia production keeps increasing the output. It can cause price decrease and the profit margin of Malaysia will be affected. Indonesia can supply most of the demanders in the market and with better tariff rate. Malaysia will lose competitive ability or be forced to sell at a lower price. And the competition from other edible oils might affect the FCPO market. Competition like sunflower oil. Bad weather falls on the soybean plantation, it helps to increase the palm oil prices. US, Brazil, and Argentina are the soybean producer countries. Once their oil supply is below the market needs, the palm oil will be the substitution. Other than that, China is the world's largest oil import country. When those countries have a massive production on vegetable oils, China tended to import oil which has the lower price. So the summary of today's webinar: in the first part, I have explained on understanding the futures market. I've covered the terminologies, the low transaction cost, high liquidity, and the bidirectional trading. And in the second part, introduction to KLCI index futures and the crude palm oil futures, I've covered the contract specifications. And the last part will be the factors that affect the futures market, which includes of interest rate, oil price, futures market, the season, and the competitors from producing country. Choong Ty'ng Ty'ng for her session. Before that, allow me to introduce her. She's the founder and the managing director of Axcelearn Sdn Bhd. She has been a frequent speaker in various seminars and conferences organized by Bursa Malaysia, and was also invited to speak in a listed companies. Without further ado, let's welcome Choong Ty'ng Ty'ng.
Hi, good evening, everyone. Now, before I start, can I assume that majority of you are beginners? Or how many of you are currently trading in futures? It doesn't matter which contracts that you're trading or which products that you're trading, right? Can you just type in the chat box? Just type in yes. If you're not trading, just leave it. If you're trading, can you please type in yes? because we are expecting majority of the audience for tonight will be beginners. Am I correct? So far I don't see any answer. So can I assume all? Yeah, majority of you beginners, but some of you already traded, but it doesn't matter. I think this new FM70 contracts, right, is very new to many of you. It is technically hot from the oven because only being relaunched last week. Now, I believe many of you, you do understand or do aware that previously Bursa Malaysia, they do have FM70 contracts. But I think if I'm not mistaken, they took down this year and subsequently they relaunched it last week, just last week only. So how many of you traded before the previous FM70 or not? If you're traded before, just type in yes in the chat box or in your question box. Can you please just type in yes? If you traded before the previous FM70 contracts. Or I can see one or two only. So majority of you never. Now, don't worry, we are going to run through the new FM70 contracts. Now, I need to speak faster for today because I have more than 40 over slides, but I only being allocated 25 minutes. So technically, every 1 minute, I need to cover more than one slide. So subsequently, if you have any question, you can type in the question box or the chat box. We'll answer you at the end of the session. Now, I'm not going to introduce about myself. Now, this is exactly my name as per my SC, so please don't doubt about it. And you just call me Ty'ng Ty'ng. I know that it's very difficult to pronounce technically, but then you just call me Ty'ng Ty'ng. Now, let me start with the disclaimer. Now, this session is purely for education purposes. There's no buy or sell call. I repeat, there's no buy or sell call. The reason behind is we are going to apply to the actual market to show some case study to you. So with that, today's session is only purely for education purposes. We will not give you any buy or sell call as well. Now let's separate into, for today's session, we are going to separate into 3 sessions. The first session, we are going to cover about what is exactly this FM70. Second session, we are going to calculate the profit and loss. How do you calculate your profit and loss if you are having a profit, or if you are having a loss, how do you calculate that? Now, the final session, we are going to start with the case study with SMA, only purely looking at this FM70. Now, what is exactly FM70? Now, before we really understand what is exactly FM70, we need to understand what is futures. Now, I'm not going to cover in details because just now Yonn Xuen already covered, but I'm going to let you understand that actually for us to look at what is exactly a futures, right, we can separate into 5 areas. The first one is definition. Second one is the terminologies. The third one is the product available in, like, for example, in Bursa Malaysia derivative. The fourth one is the underlying market. And the final one is the contract specification. So the first 2 columns already being covered by Yonn Xuen just now. I'm going to focus on the final 3 areas. One is product available, the underlying market. Why we have the underlying market is because futures itself is a derivative products. I hope that you can understand that. Now, derivative products, as a layman explanation, is like we as a kids, we derive from our parents. So without our parents, we are nobody. We can't even come to this world. So technically, futures is a derivative products. We need to derive from something. So this underlying market is like your parents. We need to know their behavior. We need to know their market direction, etc. because it will impact futures. For example, I used to use this example. It's like if our parents, they're hot tempered, technically, we as their kids, we are hot tempered as well. So it's like both my parents, they're hot tempered. So for me, I'm hot tempered as well. So we need to know who is our parents because their market direction will affect us as well. Their characteristics, their features will affect us as well. Now, the last one is the contract specification. For this session purposes, we only will look into FM70. As per just now, Yonn Xuen mentioned, contract specification is like a user manual. If today you have an iPhone, if you do not know how to use, first thing you need to look at your user manual, check and see how do you operate, how do you press the button, etc. But I believe nowadays, younger generation, or you will check through the YouTube, right? But the YouTube is like your user manual. It's just that they help you to read. So it's the same thing. Now, first, let's look into products available. Under Bursa Malaysia derivative, we have many products traded. 2 mostly traded products by retail is those highlighted in the star. Can you see these CPO futures? Another one is FBM KLCI futures. So these 2 products just now already being covered. Today, we are going to look into mini mid 70 index futures. This only being launched last Monday. So it's about, until today is Wednesday, right? It's about 7 days. Plus today is about 8 days only. So you are still fresh. There's a reason why Bursa Malaysia Derivative organized the whole series of this FM70 for you to understand. Now, exactly what is this FM70? This FM70, we have our FBM KLCI, which is your top 30 index, your top 30 counters, and subsequently from the 31st until the 100 counters is your mid cap. So this is all categorized under FBM 70. So the so-called as the derivative products is the futures products is what we call as this FM70. Can you see this? FM70. So in short, we call it as FM70. And let's look at the underlying market. Who is their parents? Now, can you see the first line? So this part, your underlying, your right-hand side, first line, first row, this is your FTSE Bursa Malaysia Mid 70 Index, what we call it as FBM Mid 70. So your futures products is this, what we call it as FM70. So this is exactly what you are trading or what you are going to discover in a short period of time. Now, let's show you exactly what is the underlying market, who is their parents, and who is the futures market. For example, in this case, right, this is your FBM KLCI. So FBM KLCI every day, whether the market going higher or lower, we are referring to FBM KLCI. So this FBM KLCI is your underlying market. I believe majority of you do understand this index, but less likely, I would say that many of you do not really understand the FBM 70. Now, the keys, the futures market itself is this FKLI. Can you see exactly how do you buy, how do you sell? Is exactly how do you buy or sell your FKLI, or rather maybe your FCBO, or even your stocks. It's just that they allow you to start by selling. Later, I'm going to explain to you in a short while. Now, where can you get the index members? Meaning that who are these 70 constituents? Now, where can you get it? You can go through bursamalaysia.com. I repeat, you can go through bursamalaysia.com. Then you click on trade, you click on indices. So I repeat, you go to bursamalaysia.com, you click trade, you click indices, then you can see this overview, and subsequently you can see this index constituents, meaning that you can see who are the 70 counters or who are the 70 index members. So I'm not going to highlight this because if I'm going to download to show it to you, it's going to take up maybe 4 to 5 slides just to show you the 70 index members. So what you can do is you can go through Bursa Malaysia website and you can go and download by yourself. Second thing, if you require the weightage, because weightage change on daily basis, you can check with your brokers. For example, in this case, you can check with Phillip Futures. You can get the weightage from them. Now, what is the contract specification for FM70? Technically, where can you get this contract specification? You go to bursamalaysia.com, then you click on trade, you click on derivative. So if you need, you can take a photo or you can screenshot. You go to bursamalaysia.com, you click on trade, you click on derivative, and subsequently you're going to get this, exactly this. So this I downloaded from Bursa Malaysia. I screenshot from there. Now I'm not going to go through the whole contract specification. Many of it you can read it by yourself, but don't worry, on average contract specification is about 1 page of A4 size, and half of it is nothing related to you. So by then, right, on average it's about half a page. Now those things that I would like to highlight is 2. One is contract size, one is minimum price fluctuation. Now, for this FBM 70, every 1 index point is equivalent to 4 ringgit Malaysia. Can you refer to the first slide? Every 1 point is equivalent to 4 ringgit Malaysia. Unlike the previous one, is every 1 point equivalent to RM2. But right now, they increase the contract size. So every 1 point, you just need to times with 4, then you can calculate your profit and loss. Now, second areas that you need to understand is the minimum price fluctuation. Now, this minimum price fluctuation, meaning every time when the market moves, how many points it must move. So in this case, is every time it need to move by 5 index points. Meaning what? If right now it's 10, the next best bid or best ask will be 15, then 20, 25, 30, 35. it cannot be 11, 12, 13, 14, etc. So every time when the market move, it need to move by 5 points. So technically, every 1 tick is equivalent to Ringgit Malaysia 20. So can you see that? Meaning every time when the market move, it will move by 20 Ringgit Malaysia. So compared to the previous contract specification, it's definitely way more attractive. You know why? Because previous, every time when the market move, only move Ringgit Malaysia 2. So right now, in a way, generally we can speak in this way. Technically, they already increased by 10 times the contract size itself. And every time when you make, you can make 20 Ringgit Malaysia per points. Now the rest, you can read it by yourself. The trading hours as usual, similar to the FKLI from 8:45 to 12:45, and afternoon session from 2:30 to 5:15. This all you can read it by yourself, or else you can download from Bursa Malaysia. And I'm only going to go through those very important parts. Now, for initial margin, currently Bursa Malaysia fixed it at 2,500 per contract. So technically, compared to your FKI, you can see that is lower. Your FKI is 4,200, but in a way, your return slightly higher than that compared to FKI, because FKI everything is equivalent to Ringgit Malaysia 25, but FM70 everything equivalence to RM20. So more or less every movement, right, they are quite close for FKI and FM70, but in terms of initial margin required, FM70 is lower. So for those, if you want to kickstart, maybe you can start with FM70 as well. This is some things that you can look into it. Now next, for a sec, not able to click the next button. Now, why trade FM70? Those highlighted what you are going to trade futures, I'm not going to highlight anymore, but I'm going to compare something more interesting is between, for example, first thing, transaction cost. Why you trade FM70 compared to the rest of the products? Firstly, is because of lower transaction cost. Why I say so? First of the reason is because, first thing, you can see that in terms of commission and levies, right, we separated into 3 portions. The first part is about the exchange fees is going to pay to Bursa Malaysia Derivative. Your clearing is going to pay to the clearing house. Both, they only charge Ringgit Malaysia 1 for this FM70. And commission-wise, it will be paid to Phillip Futures in this case. So these are the areas. And subsequently, definitely can't run away. We have the SST. You can't run away from this. But SST is only referring to your commission. Only your commission is going to be charged with the SST. I'm going to show you one of the example. For example, in this case, I show Ringgit Malaysia 9 is because technically you have $1 of exchange, $1 of clearing fees, and it can't be higher than FKLI. We are expecting the industry, it can't be higher than FKLI. So the most, we expect that brokers, they are not going to charge more than 10 Ringgit Malaysia. So I'm taking, for example, in this case, an example of 9 Ringgit Malaysia. Then, for example, in this case, 9 Ringgit, I need to times 2 is because you buy and sell. Don't forget, when you buy, you need to sell. If you don't sell, there's no realized profit or loss. So in this case, your times 2, then is 18 Ringgit Malaysia, then your brokerage. So in this case, I just take $9 minus $2, which is your exchange and clearing fees. So remaining at 7 Ringgit Malaysia. So 7 times 2 times 6%. So it's like, in this case, is 0.84. I'm not quite sure whether Phillip Futures, how much they are going to charge for this FM70. Maybe Yonn Xuen, can you help to answer that?
Okay, so currently in Phillip Futures, we have a very special promotion for limited time only. And now we are trading FM70 at only 5 ringgit.
Oh, okay, very good. So in this case, in their example is, this will be 7. So 7 times 2 is 14. Then this one will be 5 times 2. So don't worry about it. So at least you understand that they are below the market rate, which is what we are expecting. And this is how do you calculate your commission. So their transaction fees relatively, for this FM70, the transaction fees is relatively lower. Technically, for FM70, right, by one tick, you can cover your cost. It's definitely, definitely by one tick, you can cover the cost. Like for example, just now Yonn Xuen mentioned that FM70 Phillip Futures is going to cover at 5 ringgit Malaysia, and you plus the exchange and clearing is 7 ringgit Malaysia. You plus your SST, which is less than 1 ringgit Malaysia, you're still less than 10. And your times 2 is less than 20. But your one tick, meaning one movement, already equivalents to ringgit Malaysia 20. So in short, compared to, for example, your stocks, many of it, with one tick, you cannot cover your costs. So futures, one of the advantages, many of the products which one tick, you can cover the cost, especially for this FM70. Now, second, one of the reasons why you need to trade FM70 is because of exposure to 70 stocks. Now, when you buy one contract for this FM70, technically you have exposure to 70 stocks. So some of you, you might have this issue. I have selection phobia. Out of 70 stocks, if I'm going to trade, or I'm going to trade all the stocks, I don't think many of the retailers you can trade or buy all the 70 stocks. So you need to select out of these 70 stocks, which stocks to buy. But some of us, for example, for me, I have selection phobia. So which stock should I buy? Out of the 70 stocks, maybe I need to select 5 stocks only. So with that, if you do not want to select, you can directly go and own one futures contract, and technically you have exposure to 70 stocks. Now, how do you calculate the profit and loss? I believe that many of you would like to know. Is definitely your bread and butter. So first thing, you need to understand buy and sell. And if bullish or uptrend, you just long. Bearish downtrend, you just short. Now, remember buy low, sell high. Anything that you fulfill buy low, sell high, you are having a profit. It doesn't matter you start by buy low or sell high, or you start by selling higher. So long as you fulfill buy low, sell high, or sell high, buy low, you're having a profit. Anything vice versa of these, you're having a loss. So I repeat, so long as you fulfill buy low, sell high, you're having a profit. It doesn't matter you start by selling high or buying low. So remember, when it comes to futures, you don't need to borrow anything. If you anticipate the market is going to drop, you can start by shorting the market. You don't need to borrow, unlike your stocks. Now, this is an example for you, easier for you to understand. If you start by buying, how do you close? You need to sell. But if you start by selling, how do you close the position? You need to buy back. Now, the bottom, the diagram will show you clearly about how do you buy and sell. Let's say, for example, if you anticipate the market is going to go higher, you can buy at the lower level. Subsequently, when the market went up, you can close your position by selling it. Now, the same thing, if you anticipate, for example, some of the bad news coming out in the market, etc. So if you anticipate the market is going to drop, you can start by selling. And when the market drops, you can buy back. So this is some things that already been covered just now by Yonn Xuen. Now, I'm going to check with you whether your answer is correct or not, whether to buy or sell FM70, or what we call it as whether to long or short FM70 is interchangeable. For our industry, even you use buy, you want to buy one contract, right, is allowable in a way. So either you use buy or you use long. Now, my question, if the GDP announced is better than expected, can you please type in the comment box, should you buy or sell FM70? You just need to put in buy or sell. I believe many of you should be able to answer this. Quite simple, right? So technically, many of you already answered. Your answer is correct. So if GDP announced is better than expected, you should buy your FM70. So when the market went higher, then subsequently you can close your contract by selling it. Then you can take in the profit. Now, how do you calculate your profit and loss? For example, 5th of August, if you anticipate a market rally following a strong economic growth, then you bought one contract of FM70 at 15,200. Then let's say the next day, FM70 already trading at 15,350, and you believe that you already make sufficient profit, and you decided to sell your contract. So let's say you sold one contract at 15,350. Can you please tell me how much you are going to make, or how much is it a profit or is a loss. I give you 30 seconds. Please calculate and let me know. I give you a tips. Remember, every point equivalents to Ringgit Malaysia 4. So please calculate for me whether it's a profit or it's a loss and how much is it. Oh, I can see many of you, you calculate very fast. But your mathematics so fast. Even I open my calculator, right? I need some time to calculate, right? So last 10 seconds, for those who not yet submitted your answer, you can just calculate, then you just key in the chat box. Before I show you the answer, you just calculate, and I'm going to show you in a short while. Now, I believe many of you are able to calculate. So this technically, you just take this different. This different is 150. So 150 points, every point, remember, follow your contract specification, is every point equivalent to RM4. So 150, you need to times with 4. And remember, so long as you buy low, you sell high, you're having a profit. Or else, if you buy high, sell low, then you're having a loss. So in this case, this is your calculation. Can you see that? You just need to take 15,350 minus 15,200 times RM4. So you are having a profit of 600. Yes, many of you, your answer is correct. Very good. Now you can take a photo. If you still cannot understand, you can take a photo or you can screenshot, and subsequently you can digest by yourself. Now, case study. Now, before I start with this case study of this SMA, I'm going to show you this. Now, technically, when it comes to analysis, right, we have many schools. But two famous schools, we have fundamental analysis and technical analysis. And this is majority of the retail traders. When you start to trade, you tend to look into fundamental analysis and technical analysis. But before I continue, I'm going to show it to you that something is actually more important than that. Not only your fundamental analysis, not only your technical analysis, there are certain areas that you need to look into it. But before that, I just roughly run through whatever you can understand about this fundamental analysis and technical. When it comes to analysis, we have many. We even have quantitative analysis, etc. Now, for example, fundamental analysis, you are going to look at economy, industry, company. Technical analysis, we are going to look at technical indicators, technical tools, etc. But before that, I'm going to highlight to you one thing that is more important than this all analysis is about trading system. What is this all about, this trading system? Now, I'm going to check with you one layman terms up. For example, before you start to what we call as build your whole trading system, right? There are many areas that we need to look into it when it comes to trading. For example, we have trading methods, we have trading tools, we have trading strategies, we have many other areas, but it's just that I cannot highlight everything in this particular one page of slides. So you are going to put in by yourself, and this is what we call as your trading system. And you include yourself, the whole thing is what we call as trading plan. I repeat, the rest of the areas that you're going to highlight, like for example, your trading methods, trading tools, trading strategies, even including your analysis, etc., your trading rules, etc. This is all what we call as your trading system. But you include yourself is all what we call as trading plan. But normally we will exclude yourself because yourself is something that we cannot cover on behalf. We do not know who you are. For example, some things that we need to take into consideration about ourselves is whether we are ourselves. Are we good to trade at night or not? For example, for me, technically nighttime I don't trade. I only trade until Europe market. I don't trade nighttime. Because one of the reasons is because I sleep very early, because I wake up very early. On average, I sleep at 9 o'clock at night. So technically, if you know yourself very well, you will take into consideration when you build your whole trading plan. But today, I'm not going to cover about trading plan. I'm going to let you understand what is trading system itself. Now, for example, I give you a layman now. Can you please tell me what is exactly a car now? If you have any description about a car, you can just type in the comment box, or in your mind, do you have any idea what is a car now? Now you can continue to type. While you continue to type, I'm going to release the answer for you because we are running short of time. Now, technically, I'm going to ask you one question. Is will a car now? Or is it steering a car? Or is an engine a car? No. Or is your car seat a car? No. So definitely you are going to answer me every part also consists a car. Am I correct? You cannot have a car without a wheel. You cannot have a car only with engine. Even you are telling me that a car, the most important thing is the engine. But if your car only having the engine, can you move or not? Technically, definitely you can't move. Am I correct? So I'm going to share with you one thing. What is this trading system? Meaning, in short, is the whole picture when it comes to trading, the whole complete picture of what you need to look at it. For example, if I'm going to replace these all parts as a car with these some things that you know better, for example, the wheel representing technical analysis, the steering representing fundamental analysis, your engine representing trading strategies, your car seat representing trading tools. We have many other areas. You cannot say that I'm going to learn only TA, or I'm going to learn about FA only, or I'm going to learn about trading strategies only, or I'm going to learn about trading tools. You cannot say that because every areas, they are very important. Am I correct? Now, I'm going to show you why this trading system is very important. Imagine in Malaysia, we definitely have our traffic lights. Am I correct? Now, when it comes to trading system, part of it is like, for example, your trading rules. So if I'm going to implement these trading rules to some things that is related to traffic, is like our traffic rules. So Malaysia, we have traffic rules is like saying that if you see a green color, meaning you can go. If you see it's red lights, you need to stop. So this is all incorporated in our trading, our traffic rules. So when, let's say, for example, imagine, if today you're driving, you're in front of traffic lights. So if you see green lights, you know that automatically you can go. If you see red lights, you can stop. You need to stop. So if you think about this and apply into your trading, just imagine every time when you buy and sell, do you know exactly when to buy or not? Do you know exactly when to sell or not? Without hesitation. Now, I believe many of us always, when we want to make a decision to buy or sell, we will hesitate. Either we go for tips, either we go and check with other people, etc. We will never have the confidence to buy and sell without any hesitation. Now, why? Let's say when it comes to traffic lights, you will know that green light you need to stop, go, and red lights you need to stop. But why, when it comes to trading, you will never have this kind of confidence? One of the reasons is because you do not have your trading system. Because trading system, they have the complete pictures about the whole trading, and they will define exactly when you can enter the market, when exactly you can exit from the market, and where is your cut loss level. Now, today, for my portion, I'm only going to cover for trading tools. For TA, FA, trading strategies, etc., the rest of the areas, Bursa Malaysia Derivative, they already organized a series of 10 webinars. All the speakers from the industry, many of them, they are very prominent or very veteran speakers. They are going to cover for you those areas like TA, FA, trading strategies, etc. Even we have speakers, they are going to cover the spread, etc. So today, I'm not going to cover this all. At the end of the session, I'm going to share with you some of the webinar session, upcoming webinar session that you can attend. But let us focus on the trading tools today itself. Now, when it comes to trading tools, you can select many of the indicators, even some of the chart patterns, etc. But to ease your understanding, today I'm going to start with SMA20. When it comes to indicators, you can select any of the indicators, but most important thing, remember, don't select too many indicators first thing. For example, one of the reasons is because if you have 2 buy call, 2 sell call, 2 indicators ask you to sell, what are you going to do? Are you going to tell me that you are going to come up with the 5th indicators? If the 5th indicator said that you can buy, you go and buy. It doesn't make sense, right? So at the end of the day, you need to select your indicators. You can base on your back testing results. Then, for example, you can start with a simple one. If you do not have any idea, you totally have no idea, you can start with simple moving average. Now, many of us, we do not like to use simple moving average, but you will be very surprised that you can go and read through many of the research papers. They've proven that simple moving average is very, very useful and is very profitable, especially when it comes to futures and commodities trading. I repeat, many of the research papers proven that when it comes to SMA, it is very useful when you apply it in futures or commodities. So right now we are in futures market. If you are going to apply in stocks, might not be. One of the reasons is because futures, we have both direction. You can buy, you can sell, but stocks you can only buy. So don't worry if you totally do not have any ideas, just start with something very simple like simple moving average. And when it comes to parameters, you can select, for example, the commonly used like 10, 20, 50, 100, 150, 200. But the best is you back test it and select which indicators to use or which parameters to use. But to ease your understanding, I start with one of the common one, which is SMA 20. You can even start with some odd figures like SMA 14, 12, 22, etc. based on your backtest results. And when you use this SMA, you cannot use for all the products, meaning you cannot take SMA 20 and you apply it to FM 70, apply it to FKLI, apply it to FCPO, because every product, their features or their nature, they are different. So please backtest it and select the parameters to use. Now, in this case, I'm going to apply to FBM 70 because right now for FM 70, it's not long enough for me to take the example. So no choice, I need to go after FBM 70. So I'm going to go back to two recent trends. One is long, one is short. This particular trend can you see more towards your right-hand side. I cannot take it because the market not yet dropped, meaning that there's no close position yet. So I cannot show it to you. So I'm going to enlarge these particular areas. I'm going to show it to you. So for example, in this case, break above, I long, break below, I short. So in this case, I repeat, at this moment, break above, I short, I long, break below, I short. So can you see that this is the summary? If you go and refer back to your chart, it's exactly, this is FBM 70. So for example, open, I took it exactly at the close. So it is fair for us. I cannot take the day high or day low just to show you a very good figures. It doesn't make sense. So both scenarios or both days, I only take at the closing. So can you see 28th of September, you long one contract 14,200. So your margin is 2,500 per contract. Let's say when the market drop below your moving average, you close it on 21st of October. So you short one contract at 14,310. So in this case, you take 14,310 minus 14,200 times ringgit Malaysia 4, because you buy low, sell high, this is a profit. Very simple. So you take 440 divided by 2,500. Technically, you have ROI of 17.6%. Consider quite good, right? So this holding duration is only 24 days. Now, I'm going to show you one of the example for short. So this is the recent trend also, the recent 2 trend. Now, can you see that this is exactly, you started by selling, and when the market break above, you long. So I'm going to enlarge this portion. Can you see that this is when you break below, you shorted, then break above, you long. So the summary is this. So 21st of October, you shorted one contract at 14,310, the same margin. You close on 5th of November when the market break above because you short. When you short, you are expecting the market to drop. If the market go against you, either you need to cut loss or it depends on your trading strategies. So in this case, it's your long at 14,330. Also taking at the closing price. So in this case, there's a loss of 80 ringgit Malaysia, and your ROI is negative 3.2%. So your holding duration is 15 days. So these two example of case study clearly show you how do you buy and sell your FM 70. I believe this is very clear to you. If you cannot understand, you can screenshot or you can take a photo. Now, I just want to highlight for those who just started your futures trading or previously you already traded in FKLI or FCPO and you would like to kickstart your FM 70, but you don't really understand, right? This trading simulation session is brought to you by Bursa Malaysia Derivative. You can go and attend for free. What is this trading simulation? Meaning you can go and attend and you can start to trade using simulation site. Meaning you don't need to pay money to start your trading. You can test the market and you can check whether your understanding is correct or not before you actually put your money into your trading account and start to trade. Now, this trading simulation we are going to conduct on 26th of December, which is this Saturday. The time is from 2:30 to 4 p.m. Now listen carefully. For those who are going to attend the session, please remember to access before 2:30, because by 2:30 we will not allow any participant to access. The reason behind is because once the session started, even you access, you will never understand. So please access before 2:30. Now for registration, you can register through this link, but don't worry, either you can scan the QR code or later I'm going to type in the comment box. From there, you can click on the link. Now, can you all see that? I already typed in the comment box. You can click on the link to register this trading simulation session. I repeat, I already typed on the chat box. Can you see that? You can click on the link to register if you are going to attend. Now, you can take a photo or you can click on the link. Now, there's another session that I'm going to show it to you. You can just take a photo. Now, subsequently, Bursa Malaysia, they are going to have 9 webinars for different topics covering from FA, TA, spread, things that you need to know, etc. Can you see this is the series? They are going to encompass from January until March in both language, English and Mandarin. Now, we are going to start with next week, 6th of January, 5 key things you must know before you trade the new FM70 contracts. And 13th of January, can you see that how to do spread trading between FKLI and FM70? You can go and register and go and attend. So this one is, you have the QR code. You can scan the QR code to register as well. And every session, we only limit to first 300 online attendees. So if you're going to attend, please register as soon as you can before we open to the public to register. So these are all the sessions, and subsequently we are going to update the remaining sessions. So once you attend the next session, we will update you as well. So we can take a photo. So just a summary of what I already highlighted for today. 3 key takeaway points. What is exactly FM70? And you know that FM70, the underlying products is your FBM70, and your contract specification, you can go through bursa-malaysia.com to get it. Now, the profit and loss is every 1 point is equivalent to RM4, so you can calculate by yourself. And this is definitely way more competitive compared to the previous contracts because the previous contract I traded before, I know. So this is definitely something that you can look into it. And the last one is, remember, when you set up anything before you trade, you need to have a complete trading system. Set up your trading system. You can even go through Phillip Futures. They have many on their online webinars as well. You can join. They are going to cover some of the areas, like for example, FKLI, FCPO, or any other futures products. So this comes to the end of my presentation. As usual, my quotes. Successful trading starts with good trading habits. When you start, please remember to start with good trading habits. Understand exactly how do you trade, because once you inculcate bad trading habits, it's very difficult for you to change. Now, these books you can get in any of the established bookstores if you're going to kickstart in your stocks or futures trading, because this book is definitely for Malaysian. All the examples given is related to Bursa Malaysia. Now, the bottom, if you have any question, you can check with us through our social media, from our website, Facebook, to until our YouTube channels. You can check with us through that. So I'm going to open or pass it back to Yonn Xuen, and we are going to take questions.
Okay, thank you, Tyng Tyng. So because okay, I'll be choosing a few questions. So the first one will be are we by Miss Lee? So are we limited to any trading limit for futures trading account? So in Phillip Futures, our trading limit is 20 lots, and by default, when open futures trading account. Okay, so Tyng Tyng, we have one question for you by Mr. Kao. So FBM70 is which counter group?
I think the question maybe is not so clear. So technically, if you really want to understand, I assume he's trying to ask about the 70 index members. Just now I already show you through the link, right? You go to Bursa Malaysia. Let me go back these slides, right? You can check it out. Where can you download the index members? Because I believe this answer asked before that. Let me check for you.
Okay.
Hold on a sec. Can you see that? You can go through your Bursa Malaysia, you go to trade, you go to indices, and subsequently you can see all the 70 index members. I believe if you want, you can also, if you require the weightage, as I mentioned just now to you, you can check with Phillip Futures as well. They can share with you the weightage itself.
Okay. Okay, so next question by Mr. Fong. Is there a stop loss for futures? Yes, we have stop loss order in our Phillip Nova trading platform. Okay, and then hold on. Okay, so Ty'ng Ty'ng have another question for you by Mr. Ha. Why buy a contract FM70 when I can just buy the underlying indexes?
Oh, you can do that. As I mentioned to you just now, right? You can actually go and buy the stocks. There's no issue. But it's just that, for example, let's say we have 70 index members, right? So meaning that if I'm going to convey something simple for you to understand is we have 70 counters. So out of these 70 counters, let's say you're going to expose yourself. Which counter should you choose out of the 70 index members? Are you going to choose the top two? Or are you going to choose the bottom two, let's say, or are you going to simply pick? So the question is, since it's very difficult, especially for retailers to own the 70 members, index members, or what we call it as the 70 counters, what you can do is you can go directly with futures to own technically speaking, is you can own 70 index members with only single contracts, which is your FM70. So in short summary is saying that you are allowed to go directly to own the stocks, but it's just that the question is which stocks should you own? That's the question.
Okay, okay, I think that's all for today because now already 8 o'clock and 7.
I'm so sorry, slightly overshoot that.
And thank you all the audiences for attending our today's webinar. So that's all for today. Have a good day, everyone.
Same to you all. Bye.
Bye.